Hey guys, Tony here for episode 2 of Candlesticks and Coffee. We're here today with Jeremy Webb. Jeremy took CFX. He's been in CFX for a while. He's going to speak on his journey, which brought him to other mentors to further his knowledge, and we'll speak on how combining course knowledge and understanding how you can take pieces from different mentors to fit into your edge, how that can play out. I'm going to pass it over to Kim, and we'll jump right into this.
What's going on, guys? Welcome back. For this episode, we have Jeremey Webb. He's a great trader. I've spoken with him for a while. Ever since I've been in CFX, me and him kind of hit it off. So I'm really stoked to have him on today. He has a lot of awesome knowledge. Every time we talk, I always, learn something new and have valuable conversations with him. So I'm really excited to hear what he has to say. So I'll pass it to you, Jeremy, to introduce yourself.
Yeah, and thank you guys. It's such an honor to be brought onto the show. Thankfully, I had the opportunity to hear the first episode, and I was like blown away by how authentic it is and just how real it is. Because honestly, in my journey, I feel like even when you seek out teachers and mentorship, often there's always that one piece they leave out. And I think it's mainly the mental piece, the psychology piece, the lifestyle piece, like the real lifestyle, not the Lambos and, the crazy stuff in Miami, the actual what it is day in, day out for a trader. So for me, it's been a long journey for sure. But I love every bit of it. I wouldn't change it for anything. Some of it is me jumping around a bit, seeking out more information until I felt comfortable. So that's some of the things I could bring to the table. But then also just really honing in on the self-development piece for myself. So for me, I feel like everybody's journey is going to be different, but I'm definitely grateful for mine and open to sharing it.
Yeah, well, I can speak to that also. I wouldn't even say jump into courses until you feel comfortable. Trading is, we're all looking at the same thing, right? This isn't like any other business. We're all looking at the exact same thing, and our perceptions can be, north and south, and both can make you tons of money. Perfect example, indicators. Perfect example, Fibonacci. There's people that trust the MAs, and they trust their Fibonacci levels, and they use that to create the base of their trading plan and work their way up. Whereas for me, I think of a Fibonacci maybe as a confluence, not so much as a base, maybe as a tool we'll use to validate the levels I'm looking at anyway that price action told me. So I mean that's the thing. And with perspectives, maybe one mentor might have all the tools for someone to be successful, but maybe their perspective doesn't nearly align with the way you think, because we all see the same thing, but we see it worlds different. So hearing somebody else's perspective and somebody else's approach, I think helps any trader find their edge, because sometimes when you're linked with one point of view, you think that's the blueprint and that's how you're going to do it. But once you hear more, you see more, it definitely opens your eyes to different viewpoints, and those perspectives allow you to see the market a little bit differently.
Oh yeah.
Absolutely,
Oh,
absolutely.
yeah.
One thing that I think is really important also to touch on when it comes to, like Stefan was talking about, how sometimes you just might see it differently. One thing that's not often talked about is people's schedules. They'll take a course and a strategy will point them to trading M15 and below. But, if they're working throughout the day and during the high liquidity hours, like if they don't have the freedom to check every 15-minute candle closure, then maybe that strategy is not going to be the best for them. Even though it might work for the mentor, it might not work for them, and there might not be anything wrong with the strategy per se, but just your schedule and your timeline does not match up with that. So you might have to trade a higher time frame that allows you, to kind of come on the chart every 3, 4, 5 hours and kind of check how it plays out, as opposed to monitoring every 15, 5, 1 minute, if you're looking for entry.
Yeah, and you know what, Kim, you bring up a great point there. And like for me, the awesome part is I've done it all. I've traded on, the 1 minute chart, 5 minute, the hour, the 4 hour, the monthly. I mean, you name it. I've looked at it and used it for some part of my analysis. But what I can say for a certainty is you're 100% right. They don't think about the scheduling. So from a professional standpoint, I've actually been in software sales since 2011. So that's really how that's like how I've made my money in the past, and not like little money. Like we're talking about substantial
Mhm.
money, right? So north of 200K, just keeping it real. So as a result, that's my bread and butter. But thankfully, I can do that kind of stuff starting around 9:30 or 10 o'clock, afternoons, regular hours. Trading was so attractive to me. It was back in 2011 to the T. I read this book called Far From It, and it was by this guy named Rob and this girl named Amy. Amy is from Australia. She's actually still pretty well known in the trading community. She has her own course and blah, blah, blah. But basically, that was my first exposure to Forex. And I was like, whoa, what is this? I said, I need to know more. And immediately I was like, all right, I'm going to figure this out. Did the whole baby pips like most people, got a good foundation, a little touch of everything. And then it was really in 2017, I took a 5-day course with an individual. And like Stephen mentioned earlier, he was heavy on Fibonacci and stuff like that, and market structure. In truth, I don't think he really even grasped market structure entirely. However, he did grasp fibs pretty well. And it's so funny, every once in a while, just for shits and giggles, I'll throw a fib on a chart just to see. And it even blows my mind at how fibs really do. They do line up when you understand market structure properly. Like they really do work. However, I don't have to depend on it like some traders think it's the holy grail. For me, it's just an additional tool. So for me in my journey now, I feel like I know how to leverage everything. I understand the fractal nature of the market. I know that the smaller pieces build into the bigger picture and then build into something larger. And that's why for me personally, kind of getting back to the whole schedule and personal life stuff, since my bread and butter is like during the day, let's just say from like 9 to around 4, I needed a better way to be able to get in good setups and then kind of walk away from the charts. So I got into the whole lower time frame sauce and really looking for that. And it was great. However, it was often something I had to manage to the T. For me personally, that no longer fit my style of what I wanted, because I honestly feel like it gave me a little stress. It gave me a little angst in the market every day. It made me force setups. It was like I said, well, I'm trading New York. I got to find a setup. That's not always the case. You don't have to force a setup. So for me, I ended up kind of gravitating more to leveraging the higher time frames and just flowing with the flow of the market. And now, I mean, shoot, I've been in a GU buy for like over a month now. It's giving me no reason to get out. I never could have done that before, right? But it's funny because I say that back in 2011, and this just shows you how far back, I literally was a EMA crossover trader. And I would just see an EMA cross and I would buy. And I would only look at the market, I'm not playing, at 5 o'clock Eastern every day. That's when I would look at it. And I would say, oh, okay, cool. It didn't cross back over yet. So I guess we're good. This is before me knowing anything. And me and my cousin, we were just doing that. It worked for us, to be honest with you. So I say that just to say, I think we can get to that place where we overcomplicate and like overthink trading as well. And I've done that. I've been guilty of it where I'm trying to put everything on the chart. RSI, this kind of indicator, this, that, all these rules. You either buy or you sell. You're either in a buyer's market or you're in a seller's market. So like, I think the biggest value that's helped me here lately is, and I would say honestly, that's like since October of last year, 2020, I buy in a buyer's market and I sell in a seller's market. And now I let time work along with that. And it's just blown me away at the results of dropping a few lots and letting it ride for a week or two. And now you're like 400 or 500 pips deep in a trade that in the past, I would have only taken advantage of like 15 or 20 of it, right? Because I had a smaller view of the market. So it's like, there's no right or wrong, but it does go back to what you guys mentioned about what fits your life the best.
Yeah, and that's I mean that's what it is too. And it's you got a schedule, you got kids, you got a job, you got other things you have to worry about. So you really can't focus on those lower time frames and this time of days and when people. And I think the biggest thing that happens is that's where we all start. It's structure based. We start. That's what you learn: higher highs, higher lows, trade with the trend, all that stuff. And then as mentors grow and public personas grow, they run into these techniques and these advanced concepts that these structure based traders they ain't ready yet. They're not ready for it. I was telling somebody today, he was saying that he just can't seem to get in with these tight stop losses. And I was telling him because he's trying to implement these ideas that are pushed out by what I would call just like sheep traders. They're the biggest thing that's going on right now. That's what they're the head of. That's what they're going to post. That's what they're going to talk about, and that's what it is. But the traders that they're getting these things from have, I would say, they've gone through, 5 or 6 aha moments, 5 or 6, evolutions before they got to that point. And people think that they can just skip right over that when the basics, like you need to be successful at day one doing the simplest of things before you put in those concepts. But they want to be successful doing those concepts. But like you're saying, buying in a buying market, selling in a selling market, and just hold on the higher time frames and that's all you have to do. I mean, that's literally that's a 1 paragraph trading plan. And we want to overcomplicate it, like you were saying with simplicity. We want to get in on these second time frames. We want to get in on, these high algorithm setups, these order blocks. We want to get in on the Wyckoff schematic. It's like we have to be successful at day one first, because if you're not successful doing it the easy way, how do you think you're going to get into all that? You're going to overcomplicate it, and you're going to end up just what I would call spinning your wheels. You're not going to move forward.
Oh yeah, totally, man. And for the biggest, like one of the biggest things for me is I understand the math of not trading time for money, right? So I didn't want trading to just turn into another job, because at the end of the day, once you understand how finances really work, you understand your time is worth so much more in the first place. So for me, sitting in front of my desk all day was not my ultimate goal. So like, I'm very grateful now, legit, and this is like no joke. I might spend 30 minutes to 45 minutes for my true like analysis, because I'm analyzing the weekly or the 4H, that's not going to change quickly. It's not going to change on a dime. It's pretty set. So all I have to really wait until the market gets to a great place to buy. And then that's when I put my buy orders in, or I have a pending set at a particular area in the market, right? So I know what a good price for me is to buy, and I understand what a good price is for me to sell. I don't care when it gets there. I don't care how long it takes to play out. Price goes from demand to supply, supply to demand. That is it. So like once I came to that realization, it helped me to realize, and I forget who it was, some older gentleman, but he talked about the edge of traders is the ability to swing. Again, nothing against anybody that's looking at the 30-second charts or 15-second charts or 1-minute charts. Nothing against that. Hey, that works too, because of the fractal nature of the market. However, humans can't really compete against algorithms. Our internet's not fast enough, in truth. Like, we just don't have the true resources to think we're going to always win competing against an algorithm. But we can compete by knowing what the banks are doing. So for me, like once I found the solace in that knowledge from like DC, from Anthony, from a few other individuals in the market, it just brought this peace for me where I was like, wow, I can actually do a 4-hour work week. So, I work my software gig, but trading, it's one of those things where I jump in a trade and then I just manage it. So I found I might take 1 or 2 setups a week, maybe. And then I just manage it. And when I say it's like such a delight to do that, because that plays more into what I really want to do. Because, at the end of the day, we trade to make money. We're not trading for putting on a show or for bragging rights. I trade to make sure I take advantage of the financial markets. I want to make sure I'm not doing that and spending so much time that it takes away from the reason why I'm trading, which is ultimately to make money, to spend time with my family, to have resources, to increase those resources, and let my money work. So that's what's led me to the conclusion that from my personal life, being more of a swing trader fits my goals more than treating it like a job where I'm day trading every day. Again, nothing wrong with that. Honestly, because of my background, I enjoy looking at the charts every day, but I had to discipline myself to not even do that anymore, because I did find I would just take setups just to take it. And that's not, to me, that's not fitting my trading plan. It's not fitting my overall plan for life. It can become truthfully like an addiction almost if you just are itching to trade I'm just itching to trade. Oh, the market just opened. I got to. No, just because the market opened doesn't mean you got to trade. Does it fit your rules? Does it fit your plan? So now, thankfully, I found a great deal of alignment in life. And I want it to be one of those things where it takes 30 minutes for me. 30 minutes a week. That's where I'm at now. And I'm like, cool. If I could cut it down to 15 a week, I would. Because at the end of the day, you either know the market or you don't. And it's all game probabilities. I don't care if I'm wrong. With good risk management, with proper alignment with that, it doesn't matter when I'm wrong. Who cares? But I will say, even though I found out about Forex back in 2011, the journey for me really began in 2017. It's so funny. The former guy that you guys actually interviewed, Gian, me and Gian actually started a part of that journey together. We went to the same 5-day course many, many years ago now. It's awesome to see his growth as well as a trader, right? But the biggest thing, and we all stay in touch, which is cool. There's all these subgroups, I feel like, the subculture of trading, where we all kind of know each other. And we know these big people that are flashing their Lambos online too. I can text a lot of those guys on their phone right now and have a chat. But I found that the key thing is making trading your own. Once you make it your own, the world just opens up to you. And that's really been my experience. And in truth, last year, this same time, I didn't feel how I felt today. Now, I really do know, beyond a shadow of a doubt, that I can eat off this for life. I didn't truly have that confidence this same time last year. It was probably around July or August of last year, maybe even October, to be honest, where I was like, oh, wow, I get it now, Not like some special aha, not like waving a magic wand and something changed, but just a point where you're like, oh, I have my discipline together. I know I'll never take another big loss. I know I'll never blow another account. I blew a lot of accounts. Hey, I blew a ton because I was gambling back then, big gambler. And shoot, sometimes it paid off. I kid you not, one time I was in Vegas and trading. I was literally at the craps table, throwing the dice and doing a GU buy at the same time. And it worked out. Mess around, made $6,000 on my chart and made a few hundred at the Vegas table. And I was like, yo, but I couldn't duplicate it.
No,
You
that's
know,
like a nice hit of like a toxic drug. And you feel good for a minute, but then the very next time you come down, and then that's that second trade you take, the same gamble, you just give it all back.
yeah, that euphoria, right? So, but the reality is, I wouldn't trade that experience for anything, because going through it and being able to like tell that and still be a trader just shows like you have to be resilient in this market, in this industry. And like now I know I would never do that again. I would never act like I can bet the whole house on any one trade. That's silly. Right. But I feel like for me in my personal life, my frame of reference, clearly that was something I had to do, to learn better. So I think at the end of the day, if I had to teach other individuals right now, I would obviously do some technicals. I would obviously, talk about risk management, but I really dig deep on knowing yourself. I really dig deep on understanding your greed factor, understanding your euphoric capacity, understanding your even depressive capacity. Like, are you gonna like go crawl in a corner because you lost money? What's your relationship with money? Like if your relationship with money growing up was not a positive one, this can really expose some things. If it was one that is healthy, then it can still bring some light to things. But ultimately, I can say even like being a black man in America, for instance, going after the almighty dollar is important because, opportunities are not always the same. So that's why for me, trading really is about freedom. But I had to realize I don't want to become a slave to it. I realized I need to use the tool the proper way. And so far, I'm proud to say it's really done that for me. It's a true source of income. And, it's a true consistent way of making money every week or every month or whatever, however I want to judge it. But yeah, I mean, it's been boss. It's been some ups and downs though, for sure.
I I agree, and I think that everything you just said is really awesome, Jeremy. And one thing I kind of want to like talk about a little bit is because I know that you are super into swinging, and I think it's great because one thing I agree with is I was never like prior, like I'm talking about maybe 2.5, 3 years ago, I was never really into like the super lower time frame stuff because to me I always associated it with oh, scalping, I have to sit on the charts all day. You're like in and out. And I'm like, that's not what I want. The reason why I got into trading was so I could get away from that, being in front of a computer all the time and kind of take my time back. And one thing that I will say, and I'd love to get both of your opinions on this, but for me, that really changed the game was like risk to reward. Because if I have a 3 pip stop loss and say my goal is, 3% for the day, in order for me to do a 1 to 3, I only really need 9 pips. You know what I mean? And if I get 9 pips, say it takes me about 10, 15 minutes, I get 9 pips, I'm done for the day. So it's kind of like that, like it's a little bit different of a perspective with the same underlying goal. But I say this very lightly because, as we were kind of talking about prior to recording the episode, Stefan mentioned, how sometimes those like hot topics can be detrimental to traders who don't have a stable foundation. And like they might hear, small stop loss and, they want to jump on it because they think it's the next best thing. But if you don't have the principles and the foundation like really laid to where you have those strengths where you can handle that. And I'm going to interrupt myself really quickly, but Stefan posted something, and I don't know if you guys follow him or not, Stony Financial on Instagram. I suggest you do because he posted something really profound the other day. And it's so true, and it was about smaller stop losses. And he said how, and Stefan, you could also interject anywhere you want, but that a lot of people, when they try to focus on smaller stop losses, it's not about smaller stop losses, it's about better entries. And so I just want to really clarify that because people hear small stop losses and they want to jump on the bandwagon, but their entries, like they don't understand price action enough to get a better entry. And that's what a small stop loss is. It's really just a very refined, very precise entry. So I think it's very interesting because it's kind of two sides of the same coin there, where it's like you swing because you want less time on the charts, and I almost quote, not really scalp, but quote unquote scalp, because I want less time on the charts and I can get that 3% much faster. So, yeah, I mean, that was just a point that I really wanted to make and kind of touch on that with the both of you.
I would say in terms of stop losses, just starting there, the issue with these small stop losses is you only have a small stop loss if you have a very accurate entry. Your stop loss is not deemed by your entry. When you say I have a 3 pip stop loss, it doesn't mean I got in here, I'm going to count 3 pips higher, and this is going to be my stop. No, the stop has got to be an area in price that indicates a possible swap in bias. And if you are not at a level where you're waiting for the hump to appear, now if you want these tight stop losses, they really go against new trader mentality because the biggest thing that new traders lack is patience. They don't have patience to wait for setups, and they don't have patience to wait for a proper entry. And they get in on first touches, they get in on initial transitions. Professional traders are getting in after change of character has happened, after the market has swapped directions. And the reason they can have a tight stop loss is because they don't occur drawdown. But new traders always occur drawdown. It's part of the learning curve. So focusing on tight stop losses rather than accurate entries puts you in a bad place. Your stop should always be at a point that marks a bias swap. Even me personally, I think the lowest stop you'll ever see me use is 8 pips. My average stop is 14 to 16 pips. I've had 27 pip stops because I don't dictate my stop. I dictate my entry and I dictate my target, and my stop loss is set right where the buy swap would be. And if the target gives me a 1.87, I'm not taking the trade because that doesn't fit me. But I'm not going to tighten my stop loss to ensure that that RR is more attractive because that's just not how it works. Price has a tendency to reverse, and we don't. Whereas we're just guessing. Really, it's a coin flip which direction the market's going to go. When someone's a novice, you should have probability on your side prior to having profits on your side. Once you get on the right side of probability, now your profit scale is going to be tight. You're going to look at 2-3% a week, and that's a good week. That's a year in a bank account, and that's about what you're going to look at if you have a wide stop and you're hitting 1 to 2s, you're hitting 1 to 2 5s. Hell, you're hitting 1 to 1 5s. If you're doing it consistently, then you're going to be profitable. And once you get to a level of reading the chart where you can catch the move after the hump has appeared and you can have that tight stop loss, then you'll be hitting 1 to 10s, 1 to 12s, whatever it is. But you'll be at a point where you know where your stop loss is. You'll know that your stop indicates a location where the bias that you're playing on is swapped. But as a novice trader, what they're doing is they're taking their entry and they're just counting up. And that's not pip counts. Pip counts are terrible. I will always talk against pip counts. When people say, now the only pip count I'll agree with is when DC says, 35 pip stop, 25 pip stop when he first started the course, because that is a pip count that you need to give new traders. And that's just based on a true range theory is how far can it go above the zone. And that's how you indicate the high probability trades, which is what you should be doing as a new trader. So any tip I can give about stop loss is avoid pip counts. Don't say I keep my stop from 5 to 8. No, you don't. No, you don't. You don't keep your stop from 5 to 8 because you don't know what your stop is. Any position, you don't know what your stop is. My entry is usually 5 to 8 pips away from a buy swap. That's a better way to talk about it.
I'm with you there. And it's funny. I think the key thing, especially for new people, is always ask yourself why. If you start with a why, you'll typically reverse engineer back to something dealing with your ego. The only reason you need to have this small stop typically has something to do with your ego. Because I tell you the truth, I'm pretty accurate for the most part, but I still don't mind giving myself a few more pips for if the spread widens for some reason with my personal broker, because they could do that at any time, right? There's so many different variables where you take yourself out of that gambling mindset and you just put yourself into a money management mindset. We're here to manage the money. I don't want to miss a move because I decided with ego, I need to have a 3-pip stop loss instead of the appropriate, let's say 8 to 10 for that particular situation. Now, the way I determine my stop loss is literally to stop the loss, which means I was wrong at that particular time in history. Market was not switched over to buyers. It was still a selling market. Cool. Get it. That's what a stop loss is for me. Now, in the other scenario, if I can get away with it, so I could potentially increase my lot size, that's one thing. But for me, yeah, my stop is determined by where I really don't want price to go. And I know what I'm willing to lose, whether that's I know I'm losing, $50 in this trade, 100, 500, or 1,000. I determine it based off that and then set my stop appropriately. And then for targets, for instance, for me, I really don't care about just risk to reward. That's never really a consideration until after I place my trade. I'll have an idea, but for me, let's say I'm getting some good buys, my plan is to take it to the highs that existed before, or potentially we're going to create a new high. So usually if you allow time and patience to work in your favor, that usually will work out. It's just most traders are not even patient enough to look at a 4-hour chart and see it often takes 24 to 48 hours to get to the next night. If you're not away, then I just think it takes a switch how that really works, in my opinion, and that's what helped me to switch. Just literally look the charts, and I would see the ways to get to them. It usually takes a lot of hours, it doesn't happen right when you want it to happen. It might take days, weeks for you to get to a good target spot, so that helped me to kind of put that stuff.
And I agree with a lot of what you said, Jeremy. I think that I'm Stefan as well. I think that there's a point where when it comes to these small stop losses, we cannot focus on just the number, bragging rights. I have a 3-pip, a 4-pip, whatever stop, a 2-pip sometimes, whatever people, speak about with their stop loss. I think it needs to be a point where you realize you were wrong in that moment. And I know, like Stefan said, you have to place it at an area where price will likely swap from buyers to sellers, or sellers will step in or buyers will step in. You're not just going to place a trade, in no man's land in the middle of nowhere and then say, oh, I want a 3-pip stop. So you just throw your stop up. Now, that's very, very valid points, because a lot of traders, who are novice, like Stefan said, will do that. And it really has to come in at a point where you're wrong. Okay, like you said, Jeremy, there's not buyers in the market right now. It's still a seller's market. Buyers are not taking over. And I think it's just all relative. It's relative to your experience. It's relative to your schedule. It's relative to you as a person. How your personality is. Some people just don't do well sitting and waiting for charts, and they get antsy. Other people, get really, like you said, stressed when they're on lower time frames. We really have to take the time to learn ourselves and put ourselves in the best situation to have the highest probability trades, and not add other stuff against us. The thing is, with the markets, a lot of stuff is already working against us. We don't want to add to that. We want to make sure that we're playing to our strengths as much as we possibly can.
100%. I mean, and you just said it so right. I mean, even though I got mad love for the brokers that have done right by me, but these brokers don't want to see you win. They don't want to see that. They just want to see you trade. All they care about is you taking a lot of trades. At the end of the day, what they don't like is when you have the discipline to take the 1, 2, or 3 setups per week that you should trade. They get paid off you taking trades. They don't get more money by you really winning or losing, but it works in their favor to get you in a position where you're trading, you get upset, you get frustrated, your psychology messes you up, then you start revenge trading. They're just collect and swap, collect and swap.
Yeah, that also plays into the just the nature of traders as well. Like when you come into the market, going over everything we just talked about, toning your entries, having to understand, having a deep understand for the market is what gets you there. And I think that with that, you were saying with brokers making all that money, that's how everybody starts out, and that's why they're in business. So you got to get away from that. You got to get away from making decisions that are rash, and you have to get to what trading actually is, which is, I wouldn't call it exciting. It's not exciting to be a professional trader. It's a process. I literally have a trade plan that is step by step. Any situation is already solved because I know what I'm going to do if that situation arises. And that's I mean, there's no other business. I mean, it's like any other business, rather. But people want to treat it more like it's gambling, treat it more like it's a hobby or something you like doing. And honestly, if you're having fun and excitement and it's thrilling, you're not doing it the way that you need to do to be successful.
No, you're totally right there. And I mean, I think the biggest thing for traders is, and I tell a lot of the people that are newer when they ask me for advice, I say, hey, look, to be honest, if you want to talk about trading, come talk to me, come talk to other people reputable that you know. But I'm like, do not talk to friends and family and this and that do not do this. If they don't really do this, they will discourage you. They will tell you you're crazy. They will bring just this cloud, this energy that you don't want on your trading, because it really can affect your psychology. I've gone through it where I told my mother about it, and she's like, "Okay, cool. Are you making 100,000 yet?" And I was like, "Well, nah, but I mean, I had a really great week. I made like $800, like just pushing a button." And she's like, "Oh, sure, $800. Okay." So it's like I had to learn the hard way that sharing this with people sometimes not the best. So that's why I can really appreciate even being able to have this conversation. And I've had some in the past, like Kim mentioned, we've just jumped on the line and just like really zoned out for a moment because only other traders can really understand this journey. No one else can. That's the truth of it. Even though trading is like symbolic to your life. It's symbolic to how do you work under pressure? How do you handle adversity? How do you show resiliency when things are not going your way? It's the exact same stuff. But unfortunately, because people get so caught up in the numbers, they miss out on that, right? So like you said before, that's so great, like not to get excited. I don't get excited about my big wins anymore. I don't get excited about any losses. I'm just like, oh, okay, cool. Now I won't sit up here and act like there isn't a day. Like I do have certain benchmarks that will excite me a little bit. I'm not even gonna lie to you, but they're just personal goals that are cool for me as a trader because I understand what this journey's been like over the past few years. So there are like a few little benchmarks that I'll probably personally celebrate at my house, might pop a little bottle, but that's about it.
Well, yeah, that's anybody, your all-time highs, the biggest trade you ever hit. But I mean, you're going to get to a point, and I know Kim can speak on this as well because we're kind of in the same boat. You're going to get to a point where the trading is just it's the fuel for the engine, and the engine is you getting in entrepreneurship, getting into a hobby, getting into a new interest. For me, building Stony, trying to build an online presence. I'm trying to get into algos. I'm trying to get into another course. There's multiple things that I'm stacking on top just to stay busy, and trading is just the cost. It's fueling the money pushing into that. But when you're new, absolutely, dude, getting excited about being profitable, getting excited about, $2,000 in a day. And I was thinking of this when you're talking about your family and whether or not, they were agreeing that it was worth doing. There's this guy I ran into online. He was a family member of a friend, and they were talking about Dogecoin, and people, all these young guys all excited to talk about it. And this guy, he said, he's like, you guys are wasting your time. You can't make a living off of this. So I hadn't commented on a damn thing, and I jumped in right there. I'm like, you're wrong, guy. I'm like, you don't know anybody who's made a living on this. But I'm like, I can give you 800 names of people who make a living on this that I know personally because, I've met them through my groups. He's like, no, no, you can't make it. I send him my P&L twice a week. And you better believe he's been getting that for 2 weeks. So he knows that you can make a living on this. And he gives off a feel that he tried and he couldn't make it. And that's what's creating those limiting beliefs. And that's the same beliefs anybody has who talks it down. They can't believe you can make 6 figures on a computer. That's not possible. It's like, well, there's certain people that we want to be free and we want to have time and we want to get into other interests so much that shit that seems impossible, we're going to give it a shot. And once you give it, 2-3 weeks and you actually understand the mechanics of it, you go, okay, well, that makes sense. I'm just swapping currency online. It's really, that's the base of it. You're just crossing the border on foot. Every time the dollar drops, you're running the other side of the border. It's the same thing. We're just doing it online. It's not as far fetched as people think, but they don't give you the time of day sometimes.
Yeah, I agree. I think it's out of the scope of, how people can really, like, back to what Jeremy said, their beliefs around money. A lot of people have these beliefs around money and they can't fathom that money can actually come to you. And I don't want to use the word easy because I don't want, to put these terms out around trading, but that money can come to you with that ease in a quick amount of time. It's just one of the worst questions. And I know, I'm sure you guys have experienced this. I know other people have, but when a trader is like starting out or, in the sort of beginning, middle of their journey and they haven't found that consistency yet, but they talk to someone who's not a trader and the person asks, well, how much do you make off of it? Well, how much have you made? And it's like that question is like daunting to traders because only traders will understand and get hyped about making $10. Like someone could tell me that they made $10 in the market like last month and I would be like so hyped for them. I'd be like, you killed it. Like, you ended on a like
Yeah. Well,
it, and other people, like, if you tell them that, they look at you, they're like $10. Like, you know what I mean? It's like this community of like people because we get it, we've been through the journey. We understand the ups and downs. We understand what it really takes to have that consistency in the market. And there's this huge misconception because it's so easy to access MT4. Smartphone, tablet, laptop, so many people have access to the internet. Anyone can access it. So there's like this misconception about how easy it should be to be able to access the money from the MT4, but it's not. And, I think it really, really like creates this rift between, traders and not traders and stuff like that. So.
Sorry, they're not my circle anyway. No biggie.
No, you're right. You're right. And I mean, at the end of the day, I think that's why it all really goes back to just life principles as well. And like, anyone would encourage you, protect your energy. So it's the same thing with trading. Protect your trading. I don't invite everybody into my trading circle for a reason, because if they're not there, I don't have time for that. I had to learn this the hard way. People, they're intrigued or, their interest is piqued, but that doesn't mean that they really want to learn.
No, they
It just
wake
means
up.
they think.
They wake up 5 days a week. Then I'll believe them. That's the true sign of somebody who's willing to learn. You say, all right, cool.
Yep.
Next week we're heading to London. I'll see you Frankfurt 2:45 every single day. You better be up out of bed. And if they do that 5 days in a row, then all right. I'll show you a little something. But yeah,
Exactly.
everybody wants to, and then everybody doesn't.
Exactly. And I've had to learn that lesson a few times the hard way. Probably out of everybody I've ever like intervened with and like had to teach a little bit, only 2 or 3 have really stuck with it, which that's a big win in itself because it's changed their lives for the better. But ultimately, that's why I do encourage, especially new traders, keep this to yourself. Only talk to others in your community that really get it and just grow with your psychology. Because if you don't, every time you sit down to that chart, you're bringing the weight of other people, the weight of haters. And that's just not what you want. It's already hard enough, just doing it. Don't bring in that energy, when you need to be protecting it. So.
Yeah, for sure. Yeah, go ahead, Kim.
I'm sorry to interject quick, but I think that plays to a really important, thing is I feel like a lot of people come into this market with the intention to, they have these huge goals. And don't get me wrong, like having, dreams and big dreams, that's amazing. We should all have big dreams. And I always support people with big dreams. But when you come into the markets, I feel like a lot of people come in, they're like, I want to pay off, so and so's house. I want to do like big things for my loved ones. And that's great. But I feel like we need to start focusing on those small wins because, like you said, that makes it so much harder on yourself. When you haven't even seen any consistency in the market, for you to be beating yourself up because you can't pull any profits, let alone enough to pay off a mortgage, for someone else. And I feel like
Mm-hmm.
just coming into the market with realistic and like small, achievable goals and just building that confidence, and you'll get there. It is totally possible for you to earn that money to pay off that mortgage, but coming into the market with that mentality and that mentality only, like you said, it's just making it harder on yourself, and you're bringing a weight, an unnecessary weight into the market. And I think that's where a lot of marketers and stuff like that kind of hurt the industry because a lot of people come in expecting, that they're going to make profits that are going to give them Lambos and their phone becomes an ATM machine and this and that. And it's all possible, but we need to step in and make things easier for ourselves and not come in, with things that's going to make it harder on us.
Yep.
100%.
So no, agree with everything. So I think we covered most of it, guys. Hit on the mentality of a trader. We definitely touched on that. We touched on scheduling, trading around your schedule and trading a plan that better suits your lifestyle, that sets you up for more success. Look at Jay Webb. He started off on shrimps and now he's moving on to month holds. I personally have never held anything for a month, so good for you, man. I think the top I had is like 4 or 5 days. But no, yeah. So if that tells you guys anything, stick to the simplest part and work your way up. Really, you can learn based on structure and just chart time. And when someone gives you a nugget, test it and incorporate it, but don't let it replace what you're doing, because you got to find your own edge. And I can be one to say the same thing. When I found my edge, that's when I hit my success. And it sounds like Jeremy, that's the same thing that happened to him. He's got to discover the way you are and discover the trader you are before you take on such big missions as 15 seconds and lower time frame stuff.
Heck yeah, man. Totally.
All right, Jeremy, you want to put up, do you have any pages where you post content or anything you want to put on since we're about to close this out?
You know what? To be honest, like, and me and Kim had kind of talked about this. Dude, I'm so low key, man. Like, I've found that the less I share about my stuff, the better. Now, like, I am open to having chats and discussions with people, but where I am in my journey right now, I'm not really like promoting or putting anything out there today. There are a few people in my circle that I help out, and if there's other people that want that, obviously I will. But shoot, I'm just enjoying the free time of like trading and doing it efficient and less and still reaping the rewards. So that's kind of where
I hear that.
honestly.
Awesome. Awesome. So we will, if it's okay with you, we could drop your Instagram in the description on the thing, just so people can check out, you and friend you if they want to have those conversations. Totally up to you, but that way
For
people can
sure.
have access to
For
you.
sure.
Awesome. All right. Well, thank you guys so
Yeah,
much.
for
It
sure.
was a big pleasure. Big pleasure having you. Great stuff talked about today. Stefan, thank you as well. Pleasure as always.
All right. Thank you, guys.
Heck
I
yeah.
guess we'll see you
Baby
next week.
from that
This will
baby
be
from me
dropped.
too.
Yeah, he's sleeping. This will be dropping
Oh,
tomorrow, guys, at the 22nd of February. So we will be dropping this episode too. Depending on the works, trying to get out sometime around, where New York Open, New York pre-open, somewhere in there, and we'll get it sent out to YouTube so you guys can listen to it while you're making some money.
Awesome. Excited. All right, guys. Thank you so much again. Have
Now,
a good night, Jeremy.
see you guys.